Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. It's great to be back here with you. Doing a back-to-back today. Just covered JB's class because he's out, but it was a fun class to teach. That would be growth and value, but really focused today on those markets and sectors. And specifically, I want to see, sticking to that theme of rotation, still seeing more signs of rotation into potentially other sectors that have not been strong as of late. So I wanted to focus in on those today and really drill down to specific, not just industries, but actual companies where we can put forth some paper money trades here, looking at different indications as well. So I'll look forward to that. In fact, we'll dive into that fairly quickly as we do a brief market review. But again, welcome to all of you. I'm joined in the chat by a good friend of mine, colleague Cam May. Good to have Cam on board. You can follow us both on X, Cameron May CS, Mike Fairborn CS. But great to be here with you. Gary, David, Kelly, Kevin, Lola, Will, Kevin, Mighty, as well as others. Folks, let's dive on into some disclosures so we can get this going here. Information is provided here for general information purposes only. Should not be considered an individualized recommendation. Now, Schwab does not recommend the use of technical analysis as sole means of investment research. We do hit other aspects here as well, but wanted to state that. Paper money software application is for education purposes only. Now, investing does involve risk, including for some products more than your initial investment. Futures and futures options trading, although we do not trade those in this class, did want to put the disclosures out there because sometimes we will just look at the charts as well. We're going to be doing some of that just briefly today, looking at some of the main precious metals out there, gold and silver. They're kind of fascinating as well to kind of look at right now as well. Just final note, past performance is no guarantee of future results. And so with all that being said, I'm going to go ahead and just jump right back into our discussion here. Let's start off with the S&P 500 index. We were down a little bit today. We did just hear the closing bell. A little bit of a hammer. Maybe we bounce back a little bit today. Always interesting to see what that looks like too. The little shadow there on the end of that hammer pattern. I'd like to just go 5-day, 5-minute a lot of times and just see what sort of recovery we had later in the day. That was okay. I mean, it was higher highs, higher lows. Granted, it was a 5-minute chart, but it was fairly directional. That's probably what, obviously accounted for that fairly sharp tail off the bottom there of the markets. Now, will we bounce here or not? We've talked about that in this class, and we'll see it again because we always talk about things like seasonality in this class. It's kind of perfect for this class, but it's not unusual to see this sideways kind of a range in August at all. And then, of course, the possibility of a dip on an average basis. We might see this in September. We don't know if that'll happen, but that has been what seasonality has shown us, 5, 10, and 20-year timeframes. In fact, I saw a 50-year showing something very similar as well. Okay, well, that's the market there. A quick glance at the NDX. Very, very similar. You have to say a little bit of a sharp move to the downside here that we did see, not outside of what we might expect, seasonally speaking. Those are kind of expected. Volatility, highs and lows, and to a sideways channel. Lastly here, just look at the rut. By the way, as we look at the dollar sign, I don't have it in my list, DJI, that's been holding up the best. So a lot of times when we look at this, so think about big multinational companies, there's only 30 stocks there, but we did take out some highs and we're just kind of, I'll zoom in, I'm just kind of like flatlining there, which all else equal, from a trader's perspective, a lot of times they like to see, this is a positive sign. It's holding that level of prior resistance. Just a quick note, this is always interesting to do. Just go to the watch list, quotes, not there, quotes, and then pull up the Dow Jones, and you can really actually see, what's been leading the way today, what's been leading the way over the past 5 days on a percent change basis. Really kind of interesting to see, and you can see in there. Okay, so today, Walmart, you can see over here too on the 5-day. Many of these that were up today were also pretty strong over the past 5 days. I would say the biggest one that was not strong today, though, really that has been pushing the Dow up into this range, UHC, which has been selling off for quite a while. But there you go. I'm going to highlight just a few of these that have been doing pretty well over the last 5 days. Almost 4% CRM, that's Salesforce. You've got Verizon, Amgen in here, some others. In fact, why don't I just do this? Hey, just click up top here and organize it in that fashion, and we'll see them very quickly. There you go. So just some ideas. It's a really great tool and a good, quick way to find out what might be moving the Dow, what's keeping it strong, stronger than the others that have pulled back. The Dow's really just gone sideways over the last couple of days. There it is right there. 2, 3, 4 days, really kind of in a sideways range. So interesting there. Let's move over into the VIX first. I want to take a look at the VIX and just kind of show you. We did have a little bit of a spike up today on the VIX. Of course, the VIX sold off a little bit too. Not too unusual to see the VIX over long periods of time kind of hug these lower levels. That is a 15 handle right there. We've bounced around. It's not, you go back historically, you're just going to find a lot of, you take some of these core support levels and you'll see a lot of these little spikes. And this is over, extended periods of time that you'll see that. A weekly chart would show even more, but this is always interesting to see what we're getting on the VIX. Let's just highlight this time frame right here where we bounced off those levels. One of the key differences is if we look at the chart here, notice that you immediately came when we did spike up a little bit. We had some of these red candles. There's that shooting star right there. Immediately, it was just it was a spike up, and we came right back down. The difference here was that we just had some green candles, and it just kept going, and it kept holding. Prices just kept holding higher levels. It was different from just this steady sell-off day to day to day. So, you could wait and see if something like this were to happen, which is oftentimes how the VIX runs. It just kind of inches up if there is risk of the market, kind of continuing to sell off. And maybe we'd see something like that, maybe a little bit more so in September. Who knows, though? We don't know. We have to wait and see what happens there. While we're at it, though, DXY, the dollar, seeing what the dollar looks like. The dollar did kind of rally up to that 100 level, and we came off of that level. Now, the dollar is also kind of interesting, too, like the VIX. A weaker dollar can really help to fuel the markets. It certainly enables companies to export better as well, their products out into other countries. And think about this, multinational countries. Think about the Dow Jones. Pretty big. Has that been helped by the weakening dollar? For exports, you'd have to say it could have played a role. And it could continue to play a role. What's interesting here is, does the dollar start to, it could consolidate, but does it start to break new lows in here? And if so, that could show strength for the market, and maybe specifically the Dow, which has been sort of a lagger clearly to the SPX and the NDX, the NASDAQ 100. So watch those two as a guide, no doubt about it, as we go through this. I did want to say too, just as while we're on it, I did, it's kind of cool. I think you guys have probably done this before, but look at this. If you just add all these together, you might recognize what that is. That is the Mag 7, Magnificent 7. There is an ETF for it, but we don't talk about ETFs in this class. So I've simply taken all of them and just put the plus signs in there. There should be 7 though still in there. And you can see what the Mag 7 did. Notice it looks a lot like the S&P 500. A lot like it. In fact, if I come over here now into my sectors, you'll see big picture. What was down today was really the infotech and communication services, and it does play a big role. Probably, a big portion of that Mag 7 is really going to be tied into that, the market weighting of the Mag 7, right? So I showed this in the last class, but yeah, it's just a good tool. You can come over here and look into the Market Watch tab, go into Visualize, and you'll just see that Mag 7 sticking out like a sore thumb in the S&P 500. But we're going to look at other sectors that have been performing and maybe continue to, like we talked about last week. The healthcare did break that trend line. We put that on in this class to watch that as we were seeing strength, and it broke it. And there are some interesting scenarios over here in terms of potential breakouts and some that have just broken out. I wanted to look at that, but before I do, I did mention that I wanted to look big picture at some of the broader commodities. Kind of fascinating. Gold did gold futures contract did bounce a little bit today. Gold has done a fantastic job holding in a consolidation and not falling in the correction. Look at that. I mean, that was a big rally in gold here. And what have we done? We've gone sideways through there. One of the companies that we looked at in the swing trading class was AEM, and some others as well. And how did it do? A gold miner. You know, sometimes when these commodities lift up, these companies could do okay too. Potential flag pattern here, flag. Notice it's stronger than gold. It's kind of lagged gold, but AEM, maybe even today, a close above the high of the low day, a hold right there. One of the leaders. I don't know how Barrick, which has been one of the laggards, well, today it did okay. It's up to getting close to 25 there in terms of Barrick. All right, so you can see gold playing a role in there. Even though gold just moved up a little bit, the miners really took off. Some of them took off today. But, you know, we don't know what's going to happen with gold, but still, gold is interesting because it's kind of neutral when we're looking at sort of the political monetary side. What does it do? It doesn't really respond to anything. It just responds to kind of uncertainty in the markets. We've seen tariffs, a whole basket of negotiations in that regard, and fear in the markets as well. It can correlate to that. So you've got that, you've got silver, but just be mindful that there are underlying companies behind there. I think we've got like AG. That's a small company, but it is a silver company nonetheless. Okay, well, let's move back over, and I wanted to take a look at. So we looked at, here is the sector rotation. What is showing strength relative to the market off of the bottom? Materials is, we are missing our little materials thing, aren't we? Up top here. Oh, materials, supposed to say materials in here. Oh, well, it doesn't. It fell off. This is material. That's where we got to maximize our sell. It flat out doesn't have it. Okay, well, I'll put that on later. This is materials. We got a couple of financials here, but notice what's been really moving. Materials, healthcare could be getting going relative to the market. I'm talking more as of late. As of late, you can see that. And then we've also got some of the other categories like utilities over here. We're missing the label on utilities as well, but utilities has had an interesting spike. Let's take a look. We can scan for these over here, and I've set up the healthcare S&P 500 right here. I've clicked on scan. There were 61 companies in the S&P 500. If we wanted to see what the prospects were for those individual companies here, and what they could be doing, so that's one way to do it. Another thing I've done is I just put a 1 month % change in here. That, folks, is a ThinkScript. It's not guaranteed for timeliness or accuracy, but I'm going to go ahead and share that after I made that point. I'll throw that into the box here for you. I've adapted it to a 1 month time frame. That can be easily changed in the box. But here you go. 1 month % change. Not guaranteed for timeliness or accuracy, but that's the script in case you do want it. For those of you that are joining us on the archive session, I will have this in the description section below under the YouTube video, just so you have it there. Okay, now, of course, too, once we get this in place, if we ever wanted to just know all the stocks in the S&P 500 sector and have them in a watch list, we can go over here to the right, save as watch list. It's that simple. We can do that just by clicking on save as watch list and just simply saying S&P 500. I think I've already got one, but I'll just put it in nonetheless. Healthcare sector. And then we can look through some of these right now as we take a look at it. Oh, name already exists. There you go. So I already have it there, but that's how you would do it. And then you can come over here. I think many of you know this, but just in case you don't, gadget window, bottom right-hand corner, click on the plus sign, watch list, and then just create new watch list, name that there. Okay, so that's one way if you wanted to copy it. Otherwise, but if you do save it, it will just be listed here for you in your personal folders up top. Okay, so let's go ahead and take a look at a few of those right now. I looked at a couple of these just in the swing trade class. BIIB was one of them. Notice this long-term consolidation just breaking above highs right now. You can see that over here, something similar from Merck as well. We do have a paper trade on this one, but you can see us just maybe getting above that range. We don't know if we'll have a measured move or not, but you can see sometimes the bigger moves, they can start with this consolidation towards the bottom, and healthcare has been one of those. This is more of one of the bottom sort of trades or setups. DHR is one. See, DHR a little bit stronger over here. It's actually got some money flow associated with it as well. I'm going to go ahead and put a trade in on DHR here. We'll just do 50 shares. It's a $200 stock. I'm going to put the stops. We talked about that in our disclosures here. It's not guaranteed an exit at the exact stop price, but we'll put them below, a little bit below this resistance point, because some of these companies might move up, let's just say, outside of a measured move here. I'm just kind of eyeballing it. That's 190 to about 210, so about 20 points. That could be a move possibly up here if somebody was using the measured move as a target range, right? The sideways channel that it's been holding in, we measure this and we simply just say measured move from here to here. We extend that to the upside if it were to break out. That could be a resistance point. Now let's just take a look and see what that level looks like over here. Let's see, it was 230-ish. And I got to back it out. There you go, 230. Yeah, so there is a little bit of resistance down here. I'll just go ahead and put that on right now as our example trade, one of them. It's going to be a buy custom OCO bracket order. As I mentioned, I'm going to go ahead and flip this to a 50. We'll link that up. There's a 50 share. We'll scoot on over here and we'll put this up, somewhere close to 230 in terms of a target. I want to make these good tail cancel, so they don't just fall off tomorrow. But this would be a trade, somebody might want to keep an eye on. They could look at. A dip down here is about 205 below that resistance level. Just getting some broad numbers in here. Okay, so what would a trade on this kind of look like? Maybe a risk of 7 to the downside, roughly. We don't know. Again, it's a stop, but maybe somewhere close to the 205 level. But notice the target of the upside is substantially higher. Think about risk and reward. I'm going to go ahead and send this through. Markets are closed, but we'll see how that feels for us in this class. This one was a little bit stronger, actually, and it did have the money flow. Let's just throw out a couple more, though, just to see what else we have in this healthcare sector, because the sector is showing real strength relative to the market, at least as of right now. Look at this. I mean, is this the possibility? There are your earnings right there. Kind of a defensive sector. So could there be a rotation in the market now? It's been down for a while. There is your cup. Any of you do like the cup and handle? It's forming. Now, sometimes you'll form off the lower resistance. If it does do this anyways, like this, or it can go up a little bit higher and go like that. But remember, the cup and handle is a fascinating pattern because it looks like this. It not only is there the possibility of what's referred to as a saucer bottom, I've heard it referred to as a rounded bottom before. You can see it's rounding as it begins to come back up. But on the other side of a cup and handle is what? Right there. Flag pattern. It is, folks, a flag pattern right there. I mean, if it does unfold like that, but you can see that some of these do. I've looked at a lot of them that look just like that, very, very similar. So that's Zimmer. Zimmer does the hip and joint replacements, just joint replacements in general. Clearly in the healthcare group, but outside of biotech, DGX. This is a diagnostic company. Healthcare again, maybe one of the stronger healthcare companies. We've looked at a few on the bottom end. Well, how about some on the top side, showing maybe really leaders within the group? Quest Diagnostics. Highs. Some traders might wait for a possible pullback to support and a bounce for a higher, or just simply, maybe it doesn't pull back all the way, but it could just flag and flag and flag higher. Remember, we have been flat for the majority of this year, clearly. This is, this is March. And where are we here? I mean, this is, past the middle of August, and we've been really in the sideways range. So sometimes these can be geared up to run a little bit higher. Here's your weekly chart. Maybe it has a weekly type move. I mean, we've been flat for most of this year. Maybe it's gearing up for a big move. But that's Quest Diagnostics, still in the healthcare. Last one, COR. It too, maybe one of the leaders in the healthcare group, as you can see right there. Breaking above highs. That's a big level. Excuse me. That's a big number. That's 300. Big round number. We've had a tendency to show resistance at that point through here, here, and here. And what is that? That's a big size bar. A lot of traders will look for the confirmation of the larger bar as an indication that maybe it could break above. Now, the question is will it break and will it hold? But remember, the sector, as we saw, is kind of showing that long-term trend line break. You just want to remember that because maybe the sector can, in fact, power some of these moves higher. So we've got that to take a look at. Now, here is a look at our growth and value chart. And I just want to bring this up because in a lot of cases, growth will lead value. But when there is a rotation, and we're just looking at this bottom right here, look at the spike off of that level. Notice the value has really shown a little bit of a different move than the growth. And that's how you see a rotation too. A lot of the companies that you might find in it's actually, okay, so you see this symbol, $ SP500 PG. The only difference is at the end. PG for growth versus PV. You just want to change that last letter there. You can get the value. But if you look at the value, you're going to find a lot of defensive type companies in there. Utilities, healthcare, consumer staples is where I wanted to look next. I wanted to drill down because these could be the hot sectors going forward if this rotation continues. Remember, we've seen a big, huge move in a lot of these tech stocks, and perhaps it is time for a correction. There are corrections that occur in rotations. We don't know if this is one of them, but we're starting to see some of these other companies break into new highs and maybe flag a little bit. Maybe some of these other cup and handle type bottoms as well. Let's go back over to it. We'll hit this real quick. Oh, not that one. One more up. Sector grid. If you guys would like that grid, I will throw those over to you. Yeah, so this is a good question from Thea. How I'm finding these examples is all I'm doing here, Thea, is I'm just looking at the sector showing strength. We just looked at the sector rotation. What's stronger than the S&P 500? That's a good clue in. But I personally like the charts. That's a long-term trend line change. Over here in utilities, we had a little bit of a flag pattern developing. Look over here with staples. I want to look at this one next, consumer staples. Line through there. There was resistance, and we just sort of flagged higher low, potential breakout here. Defense, defense, and defense, which could be different from this rounding pattern. That's why I like to go to the individual stocks, though, to try to confirm that. But I do like Thea's question. And all I do next, Thea, is just to find them. I want to scan through using the stock hacker. Critical to use the stock hacker. That's where the power is to scan through these. Got to go scan tab, then stock hacker, and then we want to look in what group. I'm going to actually flip this around. Sorry, I'm going to flip this. I like to use kind of a top-down approach. It just so happens we have healthcare intersecting with S&P. In this case, just start bigger. Go with S&P so that it mirrors whatever's in this chart. We're looking for staples. I want to find out exactly those companies, and just those companies, that are making up this chart. They are in the S&P. It's an S&P index. So all I need to do next is come over here and intersect that with the industry itself, consumer staples, and we'll get to see what's really accounting for the core moves of that sector. We have only 38 companies here. It had 61 of the healthcare, 38 here, as you can see. What's been moving it? Tobacco right there. I'm seeing tobacco. There's a tobacco. tobacco, and what else do we have? There's a tobacco right there, Philip Morris. This is interesting too. Those companies tend to have interesting yields in a lot of cases, as we talked about. Dividend yields can be cut at any time, but some of these I think have historically long yields. I'll put that right after our monthly here. And yeah, I might just, well, I'll keep those on. What the heck? There we go. I'm going to pull this guy over here and over here, since we've got more columns, and there's the yield. You'll probably find that these might be some of the highest yields. Not only that, they're also the highest performers in that tobacco right there. 6%. I don't, oh, there's a 7 down there. ConAgra has a 7% yield right now. Interesting. Some of you guys might look at that. Okay, by the way, this little script that we looked at earlier, this script, I'll tell you what, notice this is in green. I've adapted it a little bit, but the core script was built by Ken, and he just said, hey, if they're underperforming the S&P 500, let's put them in green. I put a minus sign, the minus sign. They're still in green. They're outperforming. I mean, they're up over the past month, but they're underperforming the S&P, and that's what that minus sign's all about in there. If you ever wondered, it's just underperforming the S&P. S&P's done better than it. But this whole group is sort of fascinating. We got Kroger in here. We got to look at a few of these. We're going to do this a little bit differently. I am going to import this, and we're going to look through some of these stocks, and we'll see how they have been performing. Yeah, so let's do this. I'll go ahead and just save as a watch list right here. Really easy to do. And we'll just say S&P Staples. I don't know if I have one named just like that, and I don't. Cool. All right, so I'm going to go over here because I've got tons of watch lists, folks. Just tons. Yeah, here we go. We're going to pull this guy up. We're going to go over here, and oh gosh, I've had these for a long time. Some of them, I got to clear these up, but S&P, where are you? Staples. S&P Staples, right in front of my face. There we go. Let's go ahead and click on red. We'll link that up with our standard chart. There are all 38 of them right there. So fast. I love doing this because it's just so quick. I wanted to look at maybe some of those that, well, I'll pull it up anyways. So I'm going to pull up now over here that custom column, which was that 1 month percent. I'll knock off the bid and ask, though. We'll put it right there, just so I can categorize them just the exact same way we were looking at them. And what we'll do is we'll put it up top, click again, and there are our performers. There is the tobacco right there. Okay, so look at that. Wow. So that one has already kind of moved, but you can see, even though the sector was showing some interesting strength, this is what you might call a leader. It's still holding like that 6% dividend yield is what it looked like to me. But look at that flag pattern. This thing, it's looking like a growth stock. Now, it's not a growth stock, but I mean, traditionally, but it's almost like, it looks like a growth stock. The moves over here, really, really quite strong. And what else do we have? There's Lamb Weston's done well recently. Look at the strength. ADM, Archer Daniels Midland, commodity provider, really over there. And you can see Monster breaking above prior highs over here. I didn't want to look at Walmart. It's got a high level. Well, it continued to flag a little bit. Folks, this might just have sector strength behind us if there is that rotation. And we're getting some of these signs. And by the way, what some traders will do, whether they anticipate sector rotation or not, they say, well, I think it could be a sector shift, which certainly has happened historically, but they might just say, I just want to go with the leaders of the group. I think people might be going there. It could be the dividend. It could be the growth rates. It could be the trend. It could be a whole category of different items. There's Costco there. That was the other tobacco right there. And you can see it lagged, clearly lagged. It dipped a little bit on earnings. but there are some others in here as well. There's Pepsi. Look at Pepsi off the bottom. Change in trend? No. Higher high, higher high, higher high, higher low, higher low. By definition, change in trend kind of looks like a little bit of a cup and handle, possibly, and forming. Certainly, we don't know if it doesn't have the handle yet, but it does have a little bit of that rounded bottom. Really rounded right there. In fact, I was looking at Pepsi right down into that range. It turns out that there was that rotation, and yep, it just took off. We looked at Pepsi actually maybe it was a couple of months ago in this range. We did not place a paper trade on it, but it was flattening out a little bit, clearly flattening out. Wow, interesting. Okay, Coke, SYY, Cisco, that is the other Cisco. That made it all the way to the high, and we're just kind of flattening out a little bit here. But this could be really, really insightful and interesting to take a look at. The last one I want to look at was Kroger, because I do know Kroger had been flat for some time. Now, like we talked about in this class before, during those sector rotations, draw the ranges in here. If you start to take out those highs over here, maybe it can run because it's been kind of coiling up for a while. Of course, you might want to look at some of the fundamentals or whatever the case might be, but a measured move perhaps, or an extended move outside of that range. What do these guys pay in terms of their dividend? Trade tab right there, and okay, just under 2%. But hopefully you found this informative. It's such a great tool. When we get the real strong sector rotation, these are really interesting to look at. And I skipped out on quite a few over here as well. But I am going to put an alert in here and notify me if, in fact, we break above this range. So I right-clicked here, create an alert. And I'm just going to say something like breakout, just like that, question mark, and get texted that to my phone. Oftentimes I've gotten those, 3 to 5 seconds is where I generally tend to get those at. Okay. Cool. So a lot of stuff going on there. Yeah, and Vic says, wonder what's driving the MO. So a lot of times it can be the dividend can be a driver as well. You're getting the sort of the income-minded investors out there. They're saying, I'm looking for a staple. I think there's going to be a rotation. Let's shoot for the dividend yield. Okay, in the last little bit of time we've got, though, what I want to do is just go through our standard review. Markets and sectors. Oh, yeah, markets and sectors review, full screen. Let's just see how we're doing with some of our longer term type of indicators over here. Still holding up on the S&P when we got above the minus 70 here on our McClellan oscillator, folks. We rallied up. And by the way, this is a really interesting one to use. It's been fascinating for us because it does stay 2 to 3 weeks in terms of a possible rally. Now, do you guys recognize that time frame? 2 to 3 weeks. It's a lot like, well, the swing trade time frame, right? 13 days or so, up to 13 days, something along those lines. You can get sometimes the swing trade category to fall in to that group. And the swing trades can be somewhat interesting. I do teach a class on swing trades. I don't know if you guys are interested in that. I think many of you do go to that class actually, and encourage you to, if you like that sort of time frame, that shorter time frame. I do find it fascinating that some of these indicators, this is one of them, that we'll look at a market move over that time frame. But if the market's strong, sometimes you get the underlying, a lot of underlying stocks that could also be strong as well. Here is that playlist, folks, if you are interested in something like that. We did one recently. Yeah, well, yesterday. We're just looking at price consolidations and breakouts. Over that time frame, we have some rules that we'll look at specifically. Potential exit levels and breakout levels. How do we figure those out? What are some of the other indicators that we looked at? We actually talked about in this class the TTM squeeze as well that was in there. I'll copy that link address. And by the way, appreciate Cam filling in for me over here. Some good views on that one. I always encourage you to take a look at Cam's stuff as well. I'll throw this in the chat. If you guys do find that time frame, if that time frame resonates with you, these little flag patterns, sometimes these indicators are fascinating. That is the McClellan oscillator. But here it is right here. The Think script, sorry. Yeah, that's the wrong one. Swing trading. That would be the right one. swing trading class right there. The one we talked about yesterday is highly irrelevant to what we're discussing here. But shoot, I might as well just share that with you. The playlist, if you want to just look at the whole entire playlist, as opposed to one as well. There's the playlist. All right, cool. Very good. Folks, if you're finding value from these discussions, these presentations, definitely smash that like button. It lets me know that you like it. It helps with the YouTube algorithm as well. And love to have you subscribe to our channel, where we have over 160,000 subscribers already. So with that, quick note too, advanced decline line showing some strength, not really breaking down at all at this point in time. Really interesting right there, as well as the SPX EW. Look at it holding flat. We've talked about this before. That's just the EW at the end, the equal weight. So we're taking out the impacts of the Mag 7 and saying, gosh, everything's equally weighted in here. And how is it doing? It's right at resistance, which is kind of an interesting place to be right around October, where we kind of bounce around. Maybe it consolidates a little bit around September. But what could that mean, possibly through September or even this month, towards the end of the year, if you were to get a breakout? We're seeing some of the market breadth kind of kick in gear a little bit, folks. We only had that one Oman spike over here, and it wasn't on a lower high, for example. So I'm just going to bypass that right there. And you notice we did get some spikes, which is encouraging, for new highs being made on the NYSE. That's the symbol right there. That to the chat, just so you can see it. But that's encouraging. This is making higher highs and higher lows. And so some of those companies that really lagged are kind of kicking back in gear here. And that could be helpful. You want to see market breadth. You want to see some of these signs. A lot of times traders will look at those if you want to see the trend continue. And right now, we've had that big run from the Mag 7. Can we really extend higher, like on the AI plays and all this stuff? Or do we need other companies to really kind of kick in gear? That might be help from the tariff situation, perhaps. That is right there, our seasonality. Very seasonal right now. Obviously, the tariffs weren't, but there's that pullback that we saw in September right there. Do we see it any further out? That's a 20-year. Yes, you do. You see it on the 20-year. That's 20 years. You also see it really short-term. 5-year, even a little bit stronger over the last 5 years, which is a little bit more relevant time frame. Take a look at it. Just be mindful. That's what can happen on average. Doesn't have to. Sometimes we'll get spikes going higher or even lower, or even sideways. So there you go. All right, everybody. Well, that is what I wanted to show you all today. Lastly, last but not least, is just how is the NASDAQ hanging out with its weighted, its sort of market equal weight. That's what I'm trying to say. Equal weight. Well, they're kind of similar. A little bit different from the S&P 500. Again, equal weighting the NASDAQ 100. You're still kind of equal weighting all these other tech stocks. So it's kind of tech heavy, but I still find it fascinating because sometimes when this spikes, you start to see the NASDAQ start to underperform when the average group goes higher. All right, everybody. Well, great being with you all today. Have a fantastic rest of the day. I guess this is it for today, right? We hit the last two. And with that, thank you, Cam, for your help in the chat. As always, Cam had noted in there, follow us on X Cameron May CS, Mike Fairboard CS, folks. Wish you a fantastic day, and I look forward to future discussions. Take care.